Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, June 24th, 2022. I'll start out with an update on the equity markets. Nothing but check marks across the board today. To recap, this is that 15-minute chart I got out to you this morning with the target. So we parked right a hair above and then right after the close, I turned off the pre-market or post-market trades. We're right on that. So we're going to close the week right on that 294 12-ish target right there, which again is this big old gap right there. So the next target is the top of that gap, plus you have that nice trend line coming in off the highs. So that's really nice resistance, and targets certainly for next week. We'll see what happens. Again, the weekend's coming up. Futures can do anything, so watch the futures. If they are, correlate to move down to this level. And by correlate, what I mean, just look at the futures chart, see where the NQ was trading, this morning, right after, 9:30 a.m. when the market opened. There's the open, and that'll tell you where that level, that comparable level is on NQ, because you're not going to see the gap because NQ traded through in the morning session, the Globex futures, that is. So if you get that, that would obviously be an objective long entry. If you get a pullback to 285.48, also an objective long entry. And as I said before, I don't have any intention or plans to add below that. If we go down below it and then recover, sure, maybe. But likewise, this is, you can tell by the end of day surge in the market. Look at that big volume. There's a lot of short sellers getting smoked right now. This is a nice short squeeze. As I said a few weeks back, we had a level that I was giving you that I said we'd probably see an explosive rally of taken out, and then just the other day I said, the breakout point where the market should run is on a break of this level, both the ascending triangle pattern and the recent trading range right there. So you build up a little coiled spring, pop. So even if you were waiting to see which way that breaks, and I get it, that's the more conservative, more conventional approach. I like to position ahead when I'm pretty sure one thing's going to break one way or the other. But even if you did that and you took the gap up, because there's nothing more impulsive than a gap up. That's more impulsive than an intraday break, that would have went there. So even if you took the gap up today, you made 2.61%. And if you came into the day long, you made 3.5% on QQQ. So one of the better days. And again, just check mark. So that's it. Let's not overthink it. There's the level. We could just as well gap up on Monday and hit that level. So again, keep an eye on the future Sunday night and into Monday morning. And then if we overshoot it, which is certainly a possibility as well, my thoughts. So this is more of a resistance / target zone. Runs from about 288.50 up to about 304 right there. And it is the bottom of this trading range right there. And you have a gap right here. You have a move down to the bottom of that gap where the Qs parked that day, and then the next day they opened up and gapped down. So you have that big old gap right there. So there it is. That's what I call a high probability target. Again, whether we pull back on Monday first or not, or just gap up or open up and then fill it, that would be obviously the next price target. So nothing really much more to add to that. The daily chart, remember, the daily chart is a big part. I focus all the time on these short-term charts to kind of hone in on the levels to, if you want to micromanage a trade, or even as a less active swing trader, to just try to hone down your entries and exits on your positions. Those intraday charts work great. But then the bigger picture is the daily charts, which, if I turn off all my lines, it's simple. We have this big divergent low, and you guys know I like these divergent highs and divergent lows for swing trading, and that's what we've got here. So far it is from where I pivoted last Thursday I think it was, to long bias. We're up about 9. The Qs are up about 9.6%, and that's since last Thursday. So these are bear market rallies. They're fun to trade. Again, never stay too late to the party. But I do think, as I said, I think this one has the potential to go more than the others. And again, assuming we don't crap out, you guys know the levels on the downside. I went over that in the earlier video today where I flip from bullish to bearish. But what's different about this time, let's just measure these previous bear market rallies. That one was about 12, a little over 12%. This one here was about 17%. And I think this one has potential to be as big or bigger. That 17% rally, by the way, we did have. That was the last time we had positive divergence on the daily chart. So I didn't mean to duplicate that line when I made the line there. Turned back all my annotations on. Okay, so I've already given you my max what is for this point in time. Of course, it's a long way till we get there, and who knows, maybe I'll extend the targets or lower the targets, but that's still my max bounce target up there around the downtrend line, and or the 200-day moving average from about 320 or so. We'll see where if and when we work our way up there. But I'm sorry, that's about 330. So. All right, let's just look at the other indexes because the Qs, although it's my preferred trading proxy, it's not the only index out there. Here's the SPY S&P 500, also with a divergent low, about to make a bullish crossover. We haven't done so yet. Sometimes you have in a bear market, looks like you're going to make one, then you get rejected, like what happened right there. But quite often when you get that bullish crossover, especially with positive divergence, that's where you get these rallies. So it will help to confirm that divergence. IWM. Small caps, same story. We're about to, but we haven't yet made a bullish crossover on the PPO. If we do, we're going to have that confirmed positive, aka bullish divergence right there as I drew it. Small caps close right on that resistance level 174.85, which is also the bottom of that gap, as well as price resistance there. So if it can pop that next week, top of the gap, and then some of these other targets, and ultimately the downtrend line as well. So we're looking at from the recent low last week up to my max bounce target, the trend line in that 191-ish resistance, about a 17% rally from last week's lows on IWM. And then generally just loop back to QQQ. QQQ, we did get the bullish crossover today, by the way. Ended the day with a crossover there to confirm that divergence. Okay, other trade ideas. This one will either pan out or not, but I pressed it hard and then closed out the day because we hit that target. I don't want to go home. Sorry, I'm taking, as I told you I would, I'm going home long, but I'm going home 25% less long than I was during the day as I built up, position I came into today with. That's just how I manage risk. I'm never going to go home super heavy on a weekend, especially long in a bear market. That's just... That's too reckless for me. But needless to say, still have a decent position going in, and all my swing accounts are long as well. So I'm referring to the active trading account where I lighten up. That's the one I can go pretty heavy on, and it's a margin account, and then lighten up before the weekend. All right, other trade ideas for you. Oh yeah, that GDX I laid out today. I like this one. Gold's been just grinding around lately, but I do think it'll go. And again, I'll take this shot all day long. I pointed all these out in the past. This was back at the time that was support, and it was here as well. But this time around, or that time I should say, you had this positive divergence. You had a divergent low at support. And just to put it and to quantify it for you, that rally was about 31% in gold, or GDX, I'm sorry, the gold mining ETF. Same thing there. This is the support we're at now. It's about $29. And from there, that was about a 21% rally. We hit that support level again and didn't have divergence, but we still got a quick about a 14-15% rally. But then right here, as pointed out at the time, we had a divergent low at support as well. That was good for about a 45% rally, and wash, rinse, repeat. So no guarantees. Maybe we break support. Support levels. Once broken, it's bearish. I'll give it a little bit of room. GDX is whippy too, but see this? You have positive divergence. So this is what I'm seeing, and that's why I wanted to do the video. There's a lot of stuff setting up right now. It looks like we could get an everything rally here shortly. So divergent low, divergent low, divergent low. Take those longs, trade them as you like. Don't trade it, up to you. But I already gave you my targets today. T2 zone right here, and then T3 as of now. Gold, of course, you probably want to know what gold's going to do. Said gold, I think it'll go. There's almost what I call AD, or almost divergent low. You have two equal lows there. You're close to it there. Maybe gold will want to go punch down in the morning. There's still that trend line, like I said. You can buy back pullbacks to the trend line And if you do get another equal or marginally new low, it's going to be a divergent low. You can see the potential positive divergence. Last time we had it there on the daily was right here. We were in this buy zone, and from there, I'm trying to measure it. I know that is a busy chart. I'll turn off all the levels here. And that divergent low right there to that high was about a 20% rally in gold. But remember, trading the miners are simply a leverage trade on gold. When gold goes up X, they go up X times some factor. That was a 44% rally off those lows, so better than double what gold did. It cuts both ways, guys. So if you're wrong on gold, and there are times, well, you're going to need to see gold rally for GDX to rally. But the big thing is too the euro. US dollar, what I think is going on here, and what we'll see is the euro starting to play out. I showed you a few weeks back. We're at long-term support. I know I'm going fast through these charts. This is EUR USD, the euro US dollar pair on a weekly chart. These purple lines right here, that's a major long-term support zone. Throughout the history of the euro, this is as low as it's ever gotten against the dollar right here. And every time it has, there's been a rally. Maybe it gets taken out, yeah, and that would be bearish, but we're oversold there at support on the weekly. Daily chart has big positive divergence, like so many things right now. That's why I'm doing the video. It's almost a common theme here. Big divergences on things that are a lot of these things are inversely correlated, but we're seeing that. And potential W bottom here. We'll see. Pop that 107 633 level. We'll probably run up to the trend line and then here. And you're probably aware that I'll show you if you're not. Gold is typically positively correlated to the euro, inversely correlated to the dollar. So if I just click here, let's just make this GLD in purple. And you can see that there. So, and the farther you go back in time, the more you'll see that they tend to rise and fall together, especially the bigger trends. I'm trying to get you the arrows here. The purple's gold going up, and that's when euro, especially the strong trend here. They both peaked here. They both corrected. They both topped right there. Both corrected. You can see that there. Now we've seen this drop here, this disconnect, and that to me, and I've talked about it quite a bit, that's bullish, because normally gold would have been following the euro down. The euro has really been sinking against the dollar. Powell's been, just backpedaling, and so U.S. rates have been going up faster than euro. The European Union, who's, the ECB's more has been more dovish. But again, all things, there's always mean reversions. And the takeaway is, and I've talked on this, the fact, gold hasn't been going up lately, but it's not been going down when it should have. And what that means is simply the whole relationship between gold and the dollar. It's the gold we're buying is priced in US dollars. So if the dollar is rising, then that's bearish for gold, and if the dollar's falling, that's bullish for gold, because it takes more dollars to buy an ounce of gold. But when you see the dollar rising, which is what this is, the euro falling and the dollar going up, and gold holding up, that tells you there's overwhelming demand that's offsetting that usual the impact of the dollar, and so that is net bullish. Again, it takes a certain set of eyes to see it, but I just explained the logic behind it. And so now if we can get a rally in the euro, correction in the dollar, that should be a tailwind for the gold trade. But again, I like that setup in the miners, because it's also the reason I timed that today. Obviously I've shifted last week bullish long to equities, and I'm talking about a risk on environment. So if it's risk on, then you're going to see the gold mining stocks do well and outperform gold. The only time you really want to favor gold, the actual metal, over the miners is during strong bear markets and strong corrections, because the miners are equities and they tend to get sold down in line with the market quite often. Whereas so that's about the only time you're not going to see them. If gold is doing well, you're not going to see them do as well or better than gold. All right, let's turn that off. That comparison, give you the euro. We'll just zoom down real quick to a 60-minute chart and show you here. I'll just update it. I guess I haven't updated in a while. There was a little divergent low recently, and the euro's been walking up, just like we had a divergent low right here. And you got that rally, ended with a bearish rising wedge, and negative divergence. Sometimes these lines just tend to disappear, and that gave us this correction. But here you had a divergent low, and we've been stair-stepping higher. So that's what we need to do, and then boom, especially this level right there, this line, I'll color it up. So if I revisit it next time, that'll remind me that's the big level. Pop that, and it should be quite bullish for the euro, bearish for the dollar. Okay, so that's another trade idea. And with that, you can do silver miners, ETF, SIL. There's a lot of different options there. I'll follow up. I'll go through the miners and give you my thoughts later on. I just want to get GDX out to you guys. SILJ. That's the junior miners, just like you have GDXJ, the junior miner gold miners. But I like the big names right now, just like I'm favoring the NASDAQ 100 in the market, because when we get that risk-on environment, people are going to gobble up what they've been wanting to buy for years, those that hadn't owned it or those that got shaken out. And those are the Apples and the Microsofts and the Metas and Alphabets and Tesla and that kind of stuff. Alrighty, next one is Bitcoin. Can't make a screaming case based on the charts, but for the whole risk-on trade thing, yeah, a case can be made that buyers will come in and bargain hunters will step up and step in and buy Bitcoin. I think if again, contingent on my call on the market being right. There go the lines right there. So I think I threw this one out to you recently and gave you that target. $18 is the target. Backfill that big old gap right there, minimum target, and then possibly the trend line up to about 22. So from the recent low, or we'll just go from today where we're at. Let's just measure today's. If we hit $18, that's going to be about a 31% rally, and if we go up to that 22.40 slash downtrend line, you're talking about a 60% gain. Can it happen if the market takes another leg down? It's possible, but it's certainly not gonna help it. BRR is Bitcoin futures. That still looks decent on the 60-minute chart. You have this divergence right here, positive divergence that's been building. Pretty strong divergence too. Look at the how much the indicators are making pretty steep higher lows, with prices making lower lows. So I think this level, there's not a hard line. I don't have a good downtrend line to draw right now, or a very good resistance level, but I think 21,800 will do the trick. And of course a pop over that previous reaction high, and there's your target for the futures. I'm still targeting, as I laid out last week, 28,734 and or this downtrend line, whichever comes in first. They should come in around together if it happens. So if you trade Bitcoin futures, that should be about a 35%, maybe 36% gain for you from where we're at now. I mean, it's just about everything. I even took, I was told you I was we shorted natural gas on the way down. Let me pull that up. I'll show you UNG. I was debating whether to show you the NG or UNG. So here's UNG. Okay, so back on here, let me pull this chart down here. On May 5th, here's the chart I posted on the site, gave you these targets. I was targeting this trend line, and this was early. But I told you that was early on that trade, but stuck with it. That turned out not to be the high. What natural gas did is we put in a marginal new. We kept these divergences building, as I talked about, put in an even bigger divergent high, and we hit my target to the trend line to the penny. I was calling for a 36% drop off that high. Well, guess what? We went a little higher, but then we dropped 36%. I'll show you that. So that's, again, the chart posted back. You can see it time stamped on the bottom, or go find it on the site, May 6th. And then here we are now. So there was May 6th. You can see marginal new high. The divergences continue to build and warn of a big correction coming, bigger divergence, bigger drop, and then boom, right down to that trend line, to the button, 36% drop. And so that is support. That was a target then. It's still the target now. And worst case scenario, I think we take it out. We come down here to 1958, and then we're going to maybe back test it. But I think you can step in and buy it here. I'm going long with a small position. Natural gas is volatile. Yeah, there's always a risk, especially on a weekend. But I'm liking what I'm seeing here. Again, that's already played out for a pretty big, it's a very big drop. It's been natural gas prices cut in a third. And the downside appears relatively minor, assuming that support level holds. That's only about less than 7.5% below Yeah, right at 7% below current levels. So I think we can bounce all the way up here back to that 25.58 former target, and so that's a pretty nice trade. So if we go down, I'll just add to it next week, add to, but not below that 1958. And of course, I like trading the futures. This is let me show you what it looks like here. 3 month. We've rolled to the September futures now, so I don't have the lines I did on the other chart because that one is rolled over. And this is it. Big divergent low here on the 60-minute chart. Maybe a little wedge type pattern there. And I'm just marking it up for you now because I already know the levels. We got right here. That'd be my first target. And possibly where I take profits, we'll see. But and then the next stop is going to be about right here. And that's about, let me read these numbers out to you. 6.686 and 6.897, give or take. We sell a little bit below. The wedge would measure the pattern. Let me tighten it up. The widest part of the wedge, you take that right there, roughly add it to where the wedge breaks out, and that would measure up here. So that's actually, I think, a pretty decent target for nat gas. And that's 7,390. So from where we're at now, if hit, that's going to be about an 18% rally, and that's in addition to the roughly 36% or a good part of that that we caught on the way down from shorting it. So gosh, what else? Believe it or not, treasuries. I told you I didn't buy them back. I stayed away only because to me it's committing capital where I see more bang for the buck. And I told you I had some concerns about being bullish on the equity market, and that probably giving treasuries a headwind. I mean, they did rally, but look, you've still got nice divergence here. I tweaked this downtrend line right here. This is TLT, the 30-year Treasury bond ETF, but everything I'm looking at right now has positive divergence. So just like I said earlier today, be careful. I know some of you said you were still bearish and or short, looking for another leg down next week, and who knows, maybe we get it, but you can't rule out the potential for a big rally here, especially if it starts to be implied that the Fed may alter, and I've already seen some buzz about that maybe their trajectory of rate hikes may be softening. And if that happens again, so whether it's explicit or implicit, whether Powell actually says it, I don't know what he said lately, or the market just infers that he might not have to be aggressive going forward as he would be. A, that would be bullish for equities, number one, and B, that would also be bearish for the dollar and bullish for the euro, which would then play into what I talked about earlier with gold and the miners and all that. So anyway, that's so I still think there's a very good chance we get up to that 119.44 level. Just don't know if we get rejected at the trend line. We'll go in, maybe put in a bigger divergent low or not. So I'm just sharing that if you want it. And then max target, I think, if on TLT would be all the way up there. That's certainly a possibility. I think I'll stop here. I've covered, like I said, you can keep it easy on the indexes. The only other things I didn't cover are the futures. I haven't covered RTY in a while. This is let me show you on a 2-hour time frame. Yeah, I already covered IWM earlier in the video. This is what the futures look like on the 60-minute chart. Everything. We put in these divergent lows last week. That's why it was hard to ignore that when you have positive divergence on the 60-minute chart, daily chart, and weekly charts. That's even when you're in a bear market, you need to heed those divergences, and especially if short. Just like divergent high here, I can draw this over and over. I had to roll the futures recently. Some of my old lines on the other charts are gone. These were all pointed out at the time. Positive divergence there, and you had a nice rally, and that's it. So again, at the risk of oversimplifying it, it's kind of, don't think too deep into it. And again, I don't buy divergences for the sake of buying those. That's one thing I want to point out. That's the tough part, is deciding which divergences to ignore. And I'm going to leave it here on that note. And this is a great example. You might have seen on some of my previous charts on NQ, we had divergences forming recently, just in the last few days, as we went up and made this high, but those divergences were burned through. They were taken out, and as I expected they would be. And so therefore, this is a divergence that I ignore. You can call it confirmation bias if you want. That is, seeing, dismissing what goes against your prevailing views, but that is part of trading. Just try to be cognizant of those biases, and if you're going to dismiss something that goes against your outlook on a security, bullish or bearish, you need to have a pretty good case to build, like I talked about, reasons why. And for me, it was everything I was seeing on the longer term charts, on the daily and weekly charts, which led me to, and including and not limited to, the recent big bullish falling wedge breakout here on this 60-minute time frame. Okay, guys, that's it. So let's just see where we pick up next week. As of now, I'm still favoring more upside in the coming weeks, and I think it could be a multi. I think we're still only 1 week into what I've been calling for most likely a multi-week, even maybe multi-month rally. And if I need to change that outlook, you guys know I already covered where my views will start to change, and it could happen quick next week. But as of now, staying long and maintaining that bias to the upside for now. All right, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great weekend.